I'll begin this segment in Tanzania as the government has secured a $7.6 billion loan from China's Export-Import Bank to build a railway line that will link it to its neighbors. Tanzania wants to profit from its long coastline and upgrade its rickety railways and roads to serve growing economies in the landlocked heart of Africa. Natural gas discoveries in Tanzania and oil finds in Kenya and Uganda have turned East Africa into an exploration hotspot for oil firms, but transport infrastructure in those countries has suffered from decades of neglect and underinvestment. And in Zimbabwe, energy regulator has turned down an application by the state-run power distributor to raise electricity tariffs by nearly 50% because it will hurt a struggling economy. The Southern African nation has experienced a devastating drought that has left millions facing hunger, while a slump in commodity prices has left governments struggling to pay salaries or fund basic services. The Zimbabwe Energy Regulatory Authority consulted farmers, mines and industry on the proposed tariff rise and concluded that it will hurt the economy and raise the cost of doing business. Zimbabwe Electricity Transmission and Distribution Company in December applied to raise tariffs from 9.86 cents per kilowatt to 14.69 cents, saying it needed the money to import power and improve supply. And here in Nigeria, the Finance Minister, Ms. Kemi Adeosun, is about now briefing the Senate on the state of the country's economy. And the Finance Chief reiterates that Nigeria is still in exploratory talks with the World Bank for assistance. Ms. Adeosun also tells the upper house legislators that the Buhari's administration's fiscal spending in the new year stands at 247.9 billion naira. The finance minister also touched on the recapitalization of the Bank of Agriculture. She says plans to reflect the capital position of the development finance will be released in some 30 days from now. On Tuesday this week, the Senate held closed-door briefing with the Central Bank Governor, Godwin Emefiele. And despite consumer resistance, the prices of staple food in Nigeria have continued to rise. So what's driving these prices? Opeyemi Oguntade, Senior Investment Analyst at Financial Derivatives Company, joins me now to give us an answer to that. Good afternoon, Opeyemi.
Good afternoon.
Now, prices of rice, beans, and so on, those are the staple food I can remember for now, they are really eating up even when consumers are not buying much. Is it all about the Forex crisis or there is more to it?
Well, at the end of the day, exchange rate is really a factor price, and whenever you have an adjustment in the factor price, it tends to filter into all other segments of the economy. For domestic commodities, really, what we've seen is that transportation costs have gone up significantly. If we're looking at the prices of diesel, as at May, it was about 149 naira for a litre, and then in the month of June, it increased to 183 naira for a litre. Looking at the price today, it's going between 195 to 215 naira for a litre. So in this sense, we know that most of the trucks that transport domestic commodities across the 6 geopolitical zones are powered by diesel. So we have an increase in transportation costs for one. Then if you're looking at the prices of imported commodities, what we've seen is that excise duties have also been adjusted due to this adjustment in exchange rates. So initially, when traders used to initially pay about 199 naira per dollar for excise duty, right now what we're seeing in the market is that they are being charged according to the spot market and spot rate in the market, which is about 295 naira for a dollar. So in this sense, we're seeing, and that's the reason why we're seeing an increase in domestic commodity prices.
Now, the Naira depreciation seemed to have intensified on both the interbank and the parallel market. Why is the market experiencing dollar shortage under this new FX policy?
Well, at the end of the day, we will say the market is liquid. The initial expectation for most analysts was as soon as the adjustment came in, we would have seen an increase in inflows from investors, international investors via foreign direct investments or via foreign portfolio investments. But what we've seen is that there's been a slow. What we're saying is that they are not really coming in, and the reason why is because investor confidence has not been fully restored. Most investors are still worried about the stability of our interbank market. They're still worried about the commitments of the CBN to maintain this floating exchange rate, and for that reason, we're seeing an illiquid market, and that's why we're still having dollar scarcity.
Now, traders already had their goods repriced before the new FX policy. Now, do you anticipate yet another repricing considering what is happening at the FX market right now?
Well, yes, definitely. Traders would have to be priced because at the end of the day, traders are rational. They're rational agents, and most of them would like to adopt the price for their goods that are cost reflective. So if the price of the goods that they're importing the excise duty they have to pay on goods that they're importing are going up, then they would obviously have to reflect that in the price of the goods they're selling. If the price of transportation is increasing, they would also have to reflect that in the price of the goods they're selling. The only traders you would most likely see not adjusting prices are those that have been able to ascertain some level of cost savings, or those traders that are able to engage in some price war in the market. But when you're looking at domestic commodities, most of these commodities are homogeneous. If you go to the market and you want to buy beans, you can't really differentiate these beans from this trader's beans from another trader's beans. So in that sense, you say this trader is adopting a more cost-effective approach, because at the end of the day, most of them, their costs are similar because of the goods they're selling. And for this reason, we're saying that traders would have to reprice to ensure that their prices are reflecting the cost incurred in acquiring this goods.
Now, if this happens, what will be the outlook for inflation rate?
Inflation rate, looking at of the events that happened so far in the month of July, we've seen diesel prices are still increasing and are not relenting. We're also seeing kerosene prices are increasing, and we're also seeing that the naira has depreciated further in the interbank market as well as the parallel market. At the beginning of the month, naira was going for about 282 naira for a dollar in the interbank market. Now it's currently going for about 295. Also, similarly, in the parallel market, it was about 355 naira to a dollar, and presently it's 375 naira. So, looking at all these events and you're looking at all these indicators as well, it's suggested that we would see inflation rates are likely to maintain the upward trend. But in terms of the magnitude at which it will increase, that's another question we'd have to consider. But most likely it's going to be a marginal increase, not as significant as what we've seen in the past few months.
Now, earlier you did mention investors' confidence, which is part of the problem we're seeing at the foreign exchange market, particularly the interbank market. So what do you think the central bank can actually do at this time to boost investors' confidence in the market?
For one, the policies they've adopted are definitely a step in the right direction, but the central bank needs to restore investors' confidence by ensuring that they paint a picture of being committed to the policies they've adopted and there's no room for reversal. We've seen the CBN governor and other government officials conducting a roadshow to attract or allure investors into Nigeria, and this is definitely good actions on their part. So in that sense, I think the CBN is doing what it needs to do to ensure that investors come back to Nigeria.
Okay, and we've also seen the FX crisis affecting earnings of most companies. We have Lafarge, Cadbury, and so on. What is the way forward now?
Well, if you're looking at the global markets, we've seen prices of some certain commodities, like for instance, sugar has been increasing in recent times due to such shortages in Brazil. And most of these FMCGs are exposed to importing commodities that are denominated in the dollar, so to speak. That's your sugar, your wheat, and cocoa.
All right, Opeyemi, that's it for now. Thank you very much, Opeyemi Oguntade, our Senior Investment Officer at Financial Derivatives.